Good morning, everybody, and thanks for tuning into the Capitalist Cast. Joining me today is Mr. Joseph DiStefano from the Philadelphia Inquirer, and you are the head business reporter. I don't remember what your exact title is, but it's very impressive.
Could be that I'm the oldest.
So you're joining me today. We're going to talk about, there's a lot going on at PSERS, which is the Pennsylvania State Employee Retirement System.
Right.
And there's a lot going on there. But I mean, before we get into that, can you explain a little bit what PSERS is so people have an understanding of the scale of it?
Sure. PSERS is one of the most interesting and important institutions in the Commonwealth of Pennsylvania for 100 years. It has a sister institution, which is usually called just SERS, the State Employees Retirement System. PSERS has about $67 billion in money ultimately contributed by the taxpayers, and SERS is somewhat smaller. They're about $35 billion. And what these two funds do is they finance the retirement payments to teachers and state workers. PSERS in particular is all school employees. There's about 500,000 members of this pension system, half of them working, half of them retired. And under the terms that were approved by Governor Ridge and leaders of both parties in 2001, majority of those people are able to retire at over 70% of their pay. It is state tax free. In addition, they get Social Security. So the situation in Pennsylvania is if you work for a public school system, you might feel that you're making less than other college graduates, but you will retire if you stay there the 30 years, at pretty close to your working pay of the highest 3 years you were paid. So 60 years pay for 30 years work is one way to look at it. And that is financed by the taxpayers. Now, unfortunately, Governor Ridge and the two parties, when they increased their pensions as well as the teachers' pensions, failed to fund them. They cut contributions on the theory that this was 2001, the dot-com stocks were going to just keep going up forever. The pension funds had invested heavily in those stocks and would be really rich. That's not what happened. Ridge didn't fix it. Rendell, until the very end of his term, didn't put a fix on it. Finally, Rendell did agree because they had gotten so low, the contributions needed were so large that in 2010-11 they did pass a bill that limited the eligibility for pensions. You got to be in 10 years as opposed to 5. Limited the accruals 2% per year service rather than 2.5%. And in 2019, to their credit, Governor Ridge and Governor Wolf and the Republicans running the legislature put a cap essentially for future hires. The amount that will be guaranteed by the taxpayer. So now that you have a kind of a hybrid plan in which new hires get partly a pension guarantee up to a certain point, and then after that, they're kind of on their own for their savings, like people in the private sector mostly are.
Right.
But everybody who's still working is grandfathered whenever they were hired. So if you were hired right before the law changed, you can work for 30 years and still get the old deal. And none of this does anything. But what the Governor Wolf does stop the growth of the deficit that had been such a feature, but at a very large cost. The end of Rendell reform basically forced taxpayers, state and local, in the case of the school pension fund, to finance in ever-growing numbers the pension deficit, so it doesn't get any bigger. This year, Pennsylvania taxpayers are putting in $5 billion directly. That's $3 billion from the state from your income and sales taxes, and another $2 billion from local school districts. That's your property taxes to fund the state pension fund, plus another little more than $1 billion that goes through the teachers. The teachers see it come out of their paycheck. Of course, that's also local and state taxpayer funded money that the teachers never see, that goes right into the pension fund. So the subsidy is actually greater than $6 billion a year. The only larger budget item in the state budget is healthcare of various kinds. And this has grown from close to zero in the early 2000s to $6 billion today. Just for the teachers, it's another $3 to $4 billion for the state worker pension funds. This is a very large expense for Pennsylvanians, and it's going to get larger, even though there is a cap on what the people hired today will be taking out in 30, 40 years.
Right, because the reform that was enacted, as you mentioned, doesn't actually do anything to people who are currently in the system. It just limits new hires.
The state
So
constitution, as interpreted by state judges who are themselves members of the state retirement system, states
shockingly,
that, yeah, that if you have a contract, the Commonwealth cannot unilaterally break that contract. So you
right,
would need the agreement of all those workers to take smaller pensions. And people have a small incentive to do that. The only way you can break that kind of agreement is if the state or the employer is in very bad trouble. City of Harrisburg, the colony of Puerto Rico, the Orange County. There are a few places around the country that have managed to negotiate with their unions modifications of pensions. So they go down a little bit in order to save jobs for people currently working. Pennsylvania is considered by Moody's, despite 70 years of very slow growth, is still considered by Moody's a rich state. The people on Wall Street believe that Pennsylvania could raise more money for the pensions if they had to. So a court is unlikely to break that agreement and allow Pennsylvania to reduce those pensions.
right. So PSERS their job at the end of the day. PSERS, as we mentioned, looks out for the teachers and education employees for their pension plans. PSERS, the board, as well as the staff of PSERS, their job is to really evaluate investments and determine where to put this giant pot of money in order to make sure that these pensions can be funded in the future to the best. I mean, we still have a multi-billion-dollar, I think it's something like 50 billion for PSERS and underfunding, but for the money that they do have, to make sure that that money grows in a responsible way so that it's there for the pensioners as a payout, right?
That is broadly true. Now, a couple of details on that. There is a board of trustees, and the two boards are very different. The state pension board has 11 members, 6 of whom are appointed by the governor, 4 of whom are legislators. I think the others is the state treasurer. So it's all responsible to elected officials, and the governor can actually implement policy, especially if he has his party on his side. So that even if he has a rogue appointment, that he usually has enough votes to change policy if he wants to. Nobody has that power at the state teachers fund, because they have a board that includes 3 governor appointees, the state treasurer, 4 legislators, 2 from each party, and then 2 representatives of school boards on the theory that they're paying 40% of the subsidy, and 5 members who are plan members. So 3 of those are working teachers. One of them is a worker who's in the plan but isn't a teacher, say a bus driver or administrator, and one of them is a retiree. Now, in fact, what's happened is that the largest teachers union in the state, the PSEA, which has locals in the suburbs and a lot of the upstate townships, school districts, has captured all 5 seats. There used to be, there was an actual retiree, part of the PA Retirees Association, State School Retirees Association, who would advocate, the long retired teachers who didn't get the Governor Ridge increase have not gotten an increase since 2004. There's not been an increase approved since 2002. So they're watching their pension is a little bit less every year thanks to inflation. They're seeing these newly retired assistant superintendents and assistant principals making $100,000 pensions. There's almost 1,000 of those already out in the state. And they're still scraping by on their $10,000, $15,000. And they think it's very unfair. But the representative who's supposed to be advocating for them is an 87-year-old member of the teachers union. If you look at her election propaganda, she's very much about supporting the plan in general and supporting the union's position on the plan. So she's the 5th delegate. They're all PSEA members. The other union, the AFT, which represents teachers in Philly and Pittsburgh, they're really outraged by what the board is doing. They say that the board has been way too much of a rubber stamp for management, and they are demanding changes, but they have no power because they can't get their people elected. They don't have enough votes. What they do with that power, they've been very critical at a national level, the AFT has, of private investments in these Wall Street, firms that charge an awful lot of money and don't deliver. So that's the other problem. You mentioned about the board controlling investments. There is an investment committee on the board. It consists of the whole board. So essentially the whole board does indeed approve of investments. And there are attempts underway to change that so that staff has more power. The thing that's developed that's very unusual since Governor Wolf came in is a is a faction, reform faction on the board. And it's a very interesting faction because it's nonpartisan. The members at present, the woman who's really taken the lead is Stacey Garrity, who's the Republican treasurer,
Right.
who attended a lot of Trump's events, and she's a conservative person. Frank Ryan, who representative out of Lebanon, who is a CPA, one of the few CPAs among our lawmakers. He is a retired Marine colonel in the reserves. He is a very emphatic member of the board. And then you have Democrats also, the former treasurer who Garrity defeated, Joe Torsella. And then she turned around and said, he actually knows a lot about pensions. Let's get him back on the board, and supported Governor Wolf when he put him on there. And you've got Katie Muth, who's a liberal Democrat, just joined the board. And you've got the banking secretary, Richard Vague, who gave some money to Toomey, but also to a lot of liberal Philadelphia Democrats. So he's a member of Wolf's cabinet. Guy that knows what he's doing, to the extent that he used to run JP Morgan's credit card bank. He's got real chops. He's made a lot of money in the private sector. And these people together are critical of the investments that the current PSERS management has made and recommended with all their consultants and all their advisors. They say they've gone really heavy in private investments, private real estate, private equity, private debt, real estate, and that the fees are very high and the results have not been as promised. PSERS management defends itself. They say, well, we used to buy a lot of stocks and bonds, but Fed interest rates are so low that bonds are really tough to make your money back. We've got a big deficit. Stocks, we kind of got burned in 2001 and again in 2008 when the market went down. Because when you're running a college endowment, if the market goes down, you can freeze building for a year or two or three. When you're running a pension fund, you got to keep putting money out the door. And so they had to sell their stocks at rock bottom. They lose that money and don't get it back, and then their deficit gets a lot worse. So they said, okay, we're going to stop going heavy on U.S. stocks. We're going to do like the big boys do. We're going to do like college endowments. We're going to do like billionaires, and we're going to buy into all these big real estate and private equity funds, buyout funds, people who bought and shut the refinery in Philadelphia, the people who bought and bankrupted Manor Care, people who, whenever you hear about private equity companies, sometimes they transform businesses and make them larger. A lot of times they buy older businesses that are in trouble. They suck all the cash they can out of that, pay themselves very well so they can buy NBA teams, and also try to pay their investors pretty well so they give them more money. That's the theory. The reality has been, we had a state pension commission in 2018, 2019, looked back and said, well, for the past 10 years, we'd have been much better if we'd stayed in stocks and bonds rather than doing these private equity investments. I ran the numbers again this year. Boston College up in Massachusetts has a pretty good database on different funds. And again, Pennsylvania's funds do very poorly when you look back 10, 12 years compared to other funds, most of which were more heavily invested in stocks. Now, the people running
and in addition to them being underperforming in terms of the actual dollar return, we're actually paying much higher management fees as well for anybody who does their own like 401k or IRA investing. If you are invested in something that's passive, like an index fund, you can kind of track it as it goes against the market. And then the money that you're actually paying in order to manage that is very low. When we're talking about these, the private equity funds, you're paying a large percentage of whatever return you're actually getting. And even if you're getting a loss, you are still paying them a larger percentage in order to just manage the money.
Leo, you got that right. And more than a lot of people in state government. What that's worth.
Yeah, sadly.
But there's two issues here that with the private equity, with the private investments, with the high fees, and they're putting out $1 billion a year, some years more, some years less, just from PSERS. They're putting out hundreds of millions from SERS. Now, the people who defend private investments, they say, well, it's worth it because it doesn't really matter what you're paying out. If you are if you're making more than you would be in stocks, even if it's 1%, why not pay double the fees? Because you're collecting your money net of fees. And if you're making just a little bit more, you spend a lot more, but after paying that, you still make a little bit more. It's a good deal, and we should be in private investment. Problem is, for the last 10, 12 years, the U.S. stock market has been on a roll. Under Obama, under Trump, and even today under Biden, stocks are going up, up, up. U.S. stocks. Yep. Maybe it's a bubble. Maybe it's going to explode. Maybe we're going to get 2001, 2008 all over again soon, or maybe it'll go on for years. We don't know. But in the meantime, PSERS and SERS look dumb because they made a big bet that stocks were going to go up less than private investments. And in fact, they're doing better than private investments. So there's an awful lot of energy. So that's one issue with the fees that you're talking about. There's a second issue, and that is who is this money going to? It's going to some very rich people. I mentioned about, they got the big yachts, they got the big pro sports teams. There's an old joke on Wall Street, where's the customers' yachts, An awful lot of money goes to these folks. They are the big political contributors on both sides of the aisle. They give a lot of money to Democrats, the ones out of New York. They give a lot of money to Republicans at many levels. We had a guy in Pittsburgh, a very interesting guy. He's had a wonderful career. Thomas Tull was a movie producer. A lot of the Marvel Comics, movies he made happen or helped to make happen, in the last decade. Sold the company to a Chinese firm for a very large pile of change. His share was over $1 billion of that. Then moved to Pittsburgh, bought a piece of the Steelers. One of the first things he does, he sets up a company that's supposed to hire all these Carnegie Mellon grads to do digital stuff for industries that need to be shaken up a little bit. And PSERS meets him and invests with him. And then they do a secret project last year called Project Figs. Now, I heard about this. I'm like, what the heck? This is public money. You're supposed to talk about where it's going and who it's going to, and what it's going to be used for. And asking around, I was able to determine they'd already invested with this guy, Tull, his company, Tulco. Now they were investing in a high-end hospital scrubs firm called Figs. So the thing was called Project Newton. And that confirmed that it was indeed this company, Fig, which has since gone public and will hopefully do very well and make a lot of money from Pennsylvania. Here's the funny part. When you read the report to the board recommending this Figs, it says it was invested by some character named Mr. Thomas Lamb of the Pittsburgh Chamber of Commerce. Well, I started asking around about Mr. Lamb. He's actually the head lobbyist at PNC Bank, the largest financial services company in the state, which does a lot of business with PSERS and SERS. They and companies spun off from them make millions of dollars a year in fees, whether the investments are profitable or not. So here's this guy. He's right there in their report recommending the investment, but the relationship is not shown. He also happens to be the son of the Democrat who used to run the state Senate and the father of United States Representative Connor Lamb out there in Pittsburgh. So he's connected all kinds of ways, but you wouldn't know that if you just read their report. So this is the other objection to those high fees. They're going out there, they're fun, and this guy, 2 days after they make this secret investment, approved $100 million for his company, he gives $750,000 to the Biden victory campaign. This is a month before the election. And just to make it even, about the same amount to the Republicans running for Senate. Tull doesn't like Trump, but he, is okay with the Republicans generally, so he gives the money on both sides. And I ask him, and they tell me, it's a coincidence. It's happened to be 2 days later he gives us political money. So there is that idea that even if the investments are successful, even if all this money we're piling up and shoveling out to these private equity guys, even if it does at least as well as stocks, which it hasn't since the last big stock market meltdown, they've done worse than stocks. But even if they do as well, you're still giving money to this, elite class of rich people. Public money's going to them, and they're turning around and recycling it right back into the political bipartisan system. So there's a concern about that. This is this is all a backdrop to, there's now, because of some of these odd coincidences, as well as some other questionable decisions that have been made by PSERS, the FBI has actually now stepped in and is taking a look at some of these transactions, as well as some of the members of the board and some of the members of management of PSERS. So we don't know exactly what the FBI is looking to. We do know two things that PSERS and people involved with the investigation on one level or another have confirmed. There's two things they're looking at. We talked about how, PSERS, like other pension funds, they love to measure themselves against themselves and say we're doing very well. They set up these targets. Their advisors set up these targets. And it's not the S&P 500 or, the indexes you hear about on the news every night. They have very esoteric targets. You remember the old, joke about the operation was a success, but the patient died. That's the way these guys criticize themselves. They look at, let's see what other private credit funds in that sector did in this period. We did better than that, even though we lost 20%, even though we lost money on our energy partnerships. We didn't lose as much money as the industry as a whole, so we're going to count that as a win, and maybe we're going to pay ourselves a higher bonus while we're at it. So you have a lot of that going on. Well, that's all based on performance numbers, and who gets to count? You've got multiple layers. You've got all these reports being made. A very strange thing happened last year. You know, when they did the reform at the end of the Rendell administration, when the Republicans set some pretty interesting conditions, and one of them was, you know, when the fund has a shortfall, the taxpayer has to make that up. But we're gonna make it so that if the shortfall is big enough, the members of the plan, the teachers or the state workers, have to pay more also, a little bit more, half a percentage point more. Instead of paying 7.5% of their income into the fund, they might pay 8% for 3 years. But that's only when the fund does worse than expected by a certain amount. So they have a long-term target of 7.25%. That's how much they want to get every year. If you happen to own, if the only thing you own is it, like you were talking about, a cheap Vanguard stock index fund, you've actually done better than 7% on average the last 10 years. You've done 10 or 12%. But these guys couldn't do 7%. They did about 6%. So they did just over. You know, they ran their every 3 years. You're supposed to do this study of how well are you doing compared to your own bogey. And eventually it's going to be a 10-year comparison. But first it was a 3-year comparison, 6 years, 9 years. The accounting guys love this. It's full employment for accountants, the way they calculate this stuff. But when they did the report for 2011 to 2020, the state treasurer, who at the time was Joe Torsella, he goes, whoa, wait a minute here. We've got these annual reports accredited by accountants, certified using government, accounting standards. We put them out every year. You're not using that data in this calculation. What data are you using? What is this data you're using? And Mr. Glenn Grell, the former state representative who has tripled his salary by going to work as the head of PSERS.
And increased his pension correspondingly.
Yes, that's right. Good point. So he answers back, oh, no. The audited data, well, we got better data since then. You know, some of these things have come in differently. And actually, you know, for the year 2015, we did a little better than what we previously reported. So Torsella scratches his head and he says, but if that's the case, then you got to restate the old numbers because they're wrong. They're certified, they're audited, but you're telling me they're wrong. And Grell says, no, we really don't. It's okay. It's just for this one purpose. We're going to use this other set of numbers that we got. So they do that, and guess what? It came in for 9 years. Their return was below the standard they set, which was a pretty easy standard to begin with.
Right.
But just high enough that they wouldn't have to increase what they charged the teachers. And then it turned out there was an error. They made a mistake. The numbers were somehow wrong. They reran them. This time, they used the audited numbers as a check. And what they found was, in fact, it was 0.4% lower, 0.04% lower, which was just badly enough that they had to go back. Not all teachers, but the 100,000 hired since they changed the law now got to pay an extra 0.5 or 0.75%. You know, which if you're in Philly, paying all the taxes the Philly teachers pay, and making a little bit less than teachers in the suburbs make, that starts to be a big part of your income. You know, you're paying 6% Social Security, you're paying 4% city tax, 4% state tax. Now you're paying 8% to the pension fund. You know, you add the federal taxes, and they're really not making a whole lot of money. I'm starting to sympathize with it. But that's what happened. It's very, very embarrassing, and that is one thing the FBI decided they're going to investigate. Why in the world, if they had audited numbers, did they use these other numbers that turned out to be wrong? When did they find out they were wrong? You know, why did they continue using them anyway until the whistle got blown? Second thing they're looking at, you ever go downtown Harrisburg, you ever go out by the train or the bus station, on one side of it is the PSERS building. They got this little, I think it's 7-story brick building with an extension on it. That's where all their offices, their 300 people work. On the other side is 3 vacant blocks. Used to be the printing district. The Harrisburg Patriot was printed there. All the state reports were printed there. They bought those properties, several $1 million, and knocked everything down. The rumor was they were going to start something that some people jokingly called the Grell campus. They're going to try and persuade one or more colleges in the Harrisburg area to move their campus right near the PSERS headquarters, right near the Amtrak station. Now, what's funny about that, everybody knows because Pennsylvania is such a slow growing state because the economy has been so weak compared to other states. The number of high school graduates and college students is headed down, down, down. The last thing most of these public schools can afford is to build a new campus. So that land is sitting there. They spent millions on it. They set up these corporations of which the same people running the fund were some of the officers. They did it in such a way that it said they could be paid for services they were rendering, which turns out to be somewhat of a red flag. When we wrote about that, my colleague Craig McCoy wrote about that, and they quickly changed the terms of their tax statements. So that they said that was an error. We didn't really mean to say that. But we know for a fact the FBI, in its subpoenas, has asked everything about the Harrisburg land deals and about the bad calculation and recalculation of the return rate from last year. Now, we don't know what else they're looking at. There's a lot of other land deals and direct investments they've done around the country since the current group of managers came in. It used to be they wouldn't do that. They had bad experience in the old days. They once tried to get a Chrysler plant to come to Pennsylvania, and they wasted millions of dollars, and Chrysler didn't come. They wasted $30 million between the two plans on a soda bottling plant in Philadelphia. There's already 3 soda bottling plants. You don't have room for more than 2 most markets. But they figured they could make money with a 4th one. They lost it all. So they stopped doing those direct investments. They started hiring professionals way back in the 80s. But when the current group of managers came in 2015, they said, "Oh, we're going to start doing that stuff again." And one of the things they spent a lot of money on was the Harrisburg properties. They bought others. They have apartments in Florida. They have a pistachio farm in California. I think they've had that farm actually since the last round of direct investments. They have a mall, a Galleria in St. Petersburg that they poured money into that's been doing poorly. And so we don't know whether the feds are looking at those other investments or just Harrisburg. But there are some other nonprofit corporations that were set up, on similar terms to the one in Harrisburg that we know they originally had the officers as potentially paid providers of service.
When you say officers, would these be the officers of PSERS or officers
yes.
of other? Okay. So we're talking about the possibility that folks who are being paid by PSERS, by the taxpayers, who are, who have going to be having public pensions as a result of that, also being on the board of these direct investment companies where they could also be earning income from money that they are supposed to be overseeing, right?
Extraordinary to say, with all their staff lawyers and all their outside counsel, that's exactly how the agreement was written, that they could pay these people. Now, they say that's an oversight.
That doesn't sound suspicious at all.
Well, I can tell you that my colleagues were very interested in it when they realized it. And apparently the FBI is interested in that as well because they've been looking at it. And PSERS hired an outside law firm to look at that question as well and to also look at why the documents were later changed so that they could no longer pay those people. After we wrote about it, they changed the document so they could no longer pay those people. They say it's
an silly question. So for all of these officers who are currently, one would assume if they are at least the FBI is interested in their financial dealings, kind of given the suspicious nature of the financial transactions, are these officers of PSERS paying their own legal bills, or are they now having taxpayers pay for their defense attorneys for suspicious transactions that were going on?
Well, Craig and our colleague Angela Columbus have written about this in the past, how there's actually quite a history of Pennsylvania's legislature, the General Assembly, paying for, members' legal bills up until they get convicted. Right. And the general practice in Pennsylvania, if you read the policy, we went to the governor's office for this, is that, if there are civil probes and investigations and maybe your employees are witnesses to something, maybe they're suspected of medical fraud, by a patient or by a provider. Your employee may be sucked into that because they were involved in certifying that this person really had a condition that needed to be paid for. And it's reasonable that you want that person defended. You want them to have adequate counsel. They're probably making, $50,000 a year, $70,000 a year. They don't have a big personal legal budget. And it makes sense the agency would defend them. Where PSERS is different, and SERS also, is that, in most cases, they're not going to defend you against a criminal investigation. But in the case of these agencies, I believe that's actually prohibited under the state policy. But in the case of these two agencies, we know the policy at PSERS in particular is that, in fact, they will defend you all the way up to a criminal conviction. Then, if you are convicted, they may ask for the money back, but they will provide that in the meantime. And at PSERS, the state pension fund, they'll spend up to $25 million defending any one case or in any one year. PSERS is a larger agency. Their limit is $40 million. So that gives a lot of confidence to the people running the agency that if the federal government ever comes calling, or if they're sued, or if they are, God forbid, put on trial and eventually face criminal charges, the agency has their back. The system has their back. There's an awful lot of money for an awful lot of lawyers, and they're hiring a whole bunch of lawyers. We've got contracts from three different law firms currently representing, three different blue chip law firms currently representing, PSERS and advising on for its members. One is a criminal defense law firm out of the office they're working with is in Washington, D.C. One of them is Morgan Lewis in Philadelphia, which also gave them advice on taxes and is hiring the lawyers that are working with individual PSERS staffers who are being probed, who are being asked questions by the government. And one of them is doing an internal investigation, checking out the very same things that the government is looking at, which will prove very handy if, God forbid, they do come to the place where they're mounting a criminal defense. They'll have already investigated it very thoroughly using...
We've investigated ourselves and found nothing wrong.
Or we've investigated ourselves and found this perfectly plausible explanation for the several things that we know you're looking at. And we've had several months to figure this out. And so Here's our defense.
So I've been involved in Pennsylvania long enough that nothing really surprises me. But this is just, it's astonishing that something like this, it's fairly, for most people, it's fairly esoteric, like trying to get into, okay, well, what are the return on investments, kind of wading through all of the corporate, the board structures and everything like that. But this is really, when you look at white collar crime, white collar crime is generally valued, much higher than in terms of dollars than, what people will think about. We go back to Bonusgate, the price tag on something like this could just blow Bonusgate out of the water, just in terms of the raw dollar amount, both in terms of the amount that was potentially misused, but also the amount that it is very likely going to cost to provide defense attorneys for these people who quite possibly enriched themselves at taxpayer and pensioner expenses. This is ridiculous.
Leo, once again, you put your finger on it. The scale of this thing is really large. Now, I can tell you from experience, readers are very interested in a story about travel. My colleague Craig McCoy really took the lead on that one, because there's an awful lot of travel that goes on that is paid for. The PSERS trustees, those 15 people I broke down earlier, they're not paid. They do get free meals. They get put up in the Capitol. Boy, isn't that a great thing to be able to stay overnight in Harrisburg if you live up in Lake Wallenpaupack. But they are not paid a salary of any kind. So, the benefits of the job are helping the teachers and, all the interesting people that you get to meet who come before them in a parade to try and persuade them to give $100 million here, $200 million there. But this, the travel expenses are in the thousands of dollars. The fees for lawyers are mounting into the millions of dollars. But the amount of money they invest is tens of billions. It's larger than the state's budget, but by a factor in any given year. It's an awful lot of money, and it goes into businesses all over the world. Those oil field bonds from Kurdistan, companies all over China, are getting money invested in the hope that it will prove profitable for the Pennsylvania teachers. So if they're making these investments for other than the best reasons, if these investments are not performing, if there's any level of conflict of interest involved in hiring particular investors, that's a very big issue. And it's not only Pennsylvania, it's all the states, it's all the big cities. It's in Pennsylvania, we have more public pension plans than anywhere. There are more than 3,000 plans. Every municipality with a police department, every, the school districts are all united in one big plan. But the municipal plans, and we have more local government than just about anywhere. Illinois is the only state that is close to the number of pension plans as Pennsylvania, because they also have municipal breakdown. So every little town in PA hires 2 attorneys, one for the non-uniform pension plan, one for the police pension plan, hires 2 advisors to help them pick investments, hires 2 accountants. If you don't have a police department, maybe you only have the one, but you have a whole set. And this is more contracts for each local municipal government to hand out. This is more returns that somebody's got to track. Hopefully the Auditor General keeps an eye on it and says, oh, wait a minute, that plan's not doing very well. You need to fund that. And a single officer retiring early in some of these, claiming a disability, God forbid, maybe it's a legitimate disability, maybe they're tempted to exaggerate, but that's going to have a big impact on the plan's payouts. And then they have to end up raising taxes to pay them. So it's an enormous issue, and it reaches into every level of state and local governments. And everybody knows about Social Security's problems and Medicare's problems, but in just the dollar figures and the number of people involved, the state pension issues and the local pension issues are enormous, especially in a place like Pennsylvania that leaves it all up to every local authority has their own little plan.
And on that happy note, we try and keep things to about a half hour. I know you have a lot going on. You had actually had a breaking news story that you were working on before you came on. So I appreciate the time that you gave us today. This is something that we're going to be watching, and I've loved the coverage that you guys have put out on it, and have made sure to share via our social media pages. And we'll continue to do so. And as things develop, I would love to have you back on to really kind of talk about, so part of me really hopes that everything is on the up and up. Part of me would really just love to see this whole thing explode into a bunch of indictments, because the practices that have happened for years are just, they're shady, they're not transparent, and it really doesn't come as a surprise that the FBI is investigating. Hey, it basically is, in Pennsylvania, if it's a year that ends in a number, there's probably a federal investigation going on. So it's an astonishing amount of corruption that happens in the state. Whether or not it rises to the level of being legal corruption or just perceived corruption is a whole other story. So thanks very much for coming on today. I really appreciate your time.
We are grateful to be able to spread the word. I mean, I wouldn't wish an indictment on my worst enemy, but I think that they have got people's attention, and that's got to be a positive.
Yeah, absolutely. Thanks very much for coming on today, sir. I know I enjoyed the conversation, and I look forward to talking to you again in the future.
Thank you, man. God bless. Go get them.
Have a good one.